Deutsche Bank is a little bit of an odd beast by the standards of European banks. It really is the only significant Eurozone or even UK investment bank. It's the only bank that has maintained these ambitions to fight, toe-to-toe with Goldman Sachs and Morgan Stanley, and all that means in terms of the amount of capital that's required and what you have to pay investment bankers. Almost everyone else, whether it's the French lenders or the UK ones, have retreated from investment banking because it's so capital intensive.
Very clear statements from Cryan in his memo to employees, which was published by the bank, saying that litigation is going to continue to be a burden. They took a €1.2 billion litigation charge in just the last quarter, and so if that's coming on a regular basis, large charges, maybe not that size, but still large charges happening for the coming quarters, then we're a long way from being able to signal the all clear. And the hard work's only really starting for Cryan now. He's got to come out and show how he can sustainably drive costs down.
The dividend's going to get hit. He announced that they're either going to cut or maybe eliminate the dividend altogether. That's a big deal. This bank has paid a dividend every year since the 1950s, since post-war reconstruction. Last year, the 2014 dividend paid out this year was 75 cents. Come early summer next year, not clear what shareholders will get, if anything.
You also have investigations, in relation to potential money laundering, etc., and violations of U.S. sanctions regimes. Those, are of course uncertain and could be costly at some point. But I do think, at the end of the day, I think what is really the crucial bit for Deutsche Bank is how they plan to restructure the investment bank, and how the market will assess that, and also how successful they are, of course.